Let's now focus on to the business world, where the government has sold 15% stake in Safaricom to Vodacom in a deal worth 240.5 billion shillings as part of a plan to unlock private investment without raising taxes or national debt. After the transaction, the government will retain a 20% stake in Safaricom, while National Treasury Cabinet Secretary John Mbadi says the deal supports the government's agenda to attract investment in strategic assets and critical infrastructure.
After acquiring the 15% stake in Safaricom from the government, Vodacom plans to buy 5% from Vodafone at 34 shillings per share, raising its total stake in Safaricom from 35% to 55%. The transaction is subject to approvals from regulators in Kenya, Ethiopia and South Africa. Safaricom will remain listed on the Nairobi Stock Exchange. Vodacom Chief Executive Shamil Jusub described the acquisition as a key step in the company's strategy to expand in high-growth African markets and scale digital and financial services in Kenya and Ethiopia.
Our intention, of course, is to make sure that we can carry on with this public-private partnership, and we see government as a very important strategic shareholder going forward, and that we can continue to build the success and digitization of the economy. And that's a big drive for us, is connecting more and more people.
The transaction by Vodacom reflects a growing trend of telecom companies consolidating fintech assets to boost revenue and regional expansion.
The government of Kenya will continue to retain a significant and strategic interest in Safaricom, and it remains an important partner in our country, in our journey. Its decision to divest a portion of its shares should be understood within the broader context of responsible fiscal consolidation. This is a prudent way for government to mobilize non-tax revenue while still maintaining an active, meaningful stake in a company that continues to be a key national asset.
National Treasury Cabinet Secretary says the transaction is one of the first steps in innovatively unlocking capital without increasing taxes or the country's debt burden to allow additional investment in critical infrastructure to support growth.
So our intent in taking this step is to strengthen Safaricom's ability to invest in the next wave of digital infrastructure and services, from 5G and fiber to fintech and regional expansion. That ability to invest will benefit Kenyan consumers, businesses and the economy in general. So today's transaction is governed by well-established safeguards, regulatory institutions including Parliament or National Assembly to be specific, the Capital Markets Authority, the Communications Authority of Kenya, the Central Bank of Kenya, and the Competition Authority, among other regulators which will have oversight roles.